Yeah, good morning, everyone. So what we are seeing today morning is that markets are recovering. US market has shown some positive sign in the futures, though if you know, yesterday's it was bit soft. Even Asian markets are also looking positive, and what we see that even the commodities are also bouncing back. Dollar index has shown some reversals, is marginally up, whereas the other market like oil has moved up by almost around 1.5 dollars, whereas aluminum is flat and copper is up by around 1%. Iron ore and steel, which were down continuously coming down since last many days, is showing some reversal. Today morning they are up by iron ore is up by around 2%, and China is steel is up by around 1%. Overall, what we see that yesterday in spite of all the market negative trend, we recovered fully. So quite possible that the trend which has started yesterday of reversal or moving up can continue in the today's trade. So outlook seems positive for today. I'll request technical team to take up from here.
Thank you, sir. Good morning, all of you. This is Swati. Today, the market is likely to open on a flattish note and we're likely to witness some sideways momentum during the day. Yesterday, we have seen that the Nifty has just corrected 200 points, but somehow managed to take us up to the 24,200, and we have seen a very good bounce back rally and managed to close at nearby the day's high levels, which gives some sort of a positive sign. Now, going ahead, the immediate resistance is placed at around 24,470. Any more about that level, we believe that the increase likely to continue this back value to 24,570, 24,650. Whereas on lower side, as of now, the support is placed at around 24,300 and 24,240 levels. Coming towards the bank nifty for today intraday purpose, the resistance is placed at around 51,270, 51,500, whereas the support is placed at 50,740, 50,500. Coming towards the fin nifty, 23,140, 23,240 are the crucial resistance level we need to watch out, whereas the support is placed at around 22,940, 22,800 levels. Coming towards the stock specific, NLC India looks very good on the technical plan. The stock has given the consolidations because of the good volume. We believe that the stock has a potential to reach up to at least 290 to 300 levels. So one can go for long positions at the current market price. Then giving the stock structures of 270. That's it from my end. I request the rotating to take a point.
Thank you. Good morning, everyone. So on the derivatives front, as you have seen that a major short covering has been witnessed in yesterday's session, but still there is not a confirmation from the index front because at 24,500 strike, we are continuously seeing that for the next series, August series also, the positions are not getting shifted. It is continuously being consolidated at 24,500 strike. Once if Nifty spot manages to get stable about 24,500 level, then only we might see some stability on the index front, or else the range bound momentum will be witnessed. As I said yesterday also that the range has been shifted on the downside towards the 24,500 to 24,200 level. So once if Nifty again goes below 24,200 level, then we might witness as a profit booking scenario. But till the time it's not going below 24,200 level, till that point of time we might witness a range bound momentum on the index front. There is not much of a change from the OI front. But from the PCR front, we are seeing that the PCR yesterday stretched up sharply, giving a positive close on the PCR front, due to which we might see some stability in the first half of trading session on the index front. Hence, the stock specific front seems to be on the positive sign, and we are seeing that the major breakout has been witnessed from the mid cap to small cap and large cap front counter. So we should view keep a watch on the stock specific front rather than the index specific front till the fresh breakout are being witnessed on the index front. Specific counter and sector that looks positive in today's scenario will be oil and gas, automobile, and pharmaceutical. These three sector looks positive in today's session. Selective counter will be BPCL, Zydus Life, Tata Motor, and Sun Pharma. These four counter we are seeing that a fresh breakout has been witnessed in yesterday's session, and fresh buying will be seen in today's session also. So that's it from better to front. Thank you.
Good morning. Yesterday evening, RBI has come up with some draft guidelines, which will basically require all the banks to shore up their liquidity limits, which is present currently. So they will have to keep more liquidity, and indirectly that will impact their net interest margin. So this news is negative for banks. RBI has said that the draft circular will come into force from 1st April 2025, that is next year. So sentimentally, it's negative for most banks. On the result side, Ujjivan Small Finance Bank result is declining. Advances just touched the 30,000 crore mark, and however, on quarter basis, they were flattish and increased by 19% year on year. Profit before provisioning was flat sequentially and up 10% year on year. However, credit cost increased substantially to 1.5% levels from previous quarters levels of around 1%. So this resulted in profits coming lower by 10% YOY as well as sequentially, and result is not that good. So from a near-term perspective, we are negative. AU Small Finance Bank result is marginally above expectation. Financials for the current quarter include the merger of Fincare SFB, which happened on 1st April 2024. So this was the first quarter of merger. That's why we can't compare YOY and QOQ. Fincare also has presence in microfinance, which has boosted the merged entities NIM. So in March quarter, the NIM for AU was 5.1%. June quarter, it has increased to 6%. Management has said that they are confident of maintaining it above 5.5%. ROA remained at 1.6% because the credit cost, of course, for Fincare would be higher than that of AU. So net ROA has remained stable. The bank has received approval from the board for applying for universal license, which is expected to be filed in August. And post that, we can expect maybe in a year or a couple of years that there is a good chance because AU qualifies for most of the parameters that RBI had laid out for conversion from SFB to universal bank. So that is the only kind of long-term positive that we see in AU SFB. Otherwise, it's fully valued and we remain positive from long-term perspective. Aavas Financial's result is below expectation due to decline in NIM. Surprisingly, NIM has come down to 7.3% against levels of 8%, which we have seen since many quarters before. And that has led to profit declining by 10%, profit coming 10% below estimate. Asset quality was stable. Within affordable housing finance companies, we prefer Home First Finance and India Shelter compared to other housing finance companies. Home First Finance result is marginally above expectation. KUM grew by 8% sequentially, 35% year on year. NIM was stable at 5.3%. Asset quality was also stable with GNP at 1.7%. We remain positive on Home First. Go Digit General Insurance result has improved. It's a newly listed company. The gross direct premium income increased 17% year on year versus the industry growth of 13%. This market share increased and it stood at 3.6%. Against the available data that we have from RHP, that 9-month figure of last year was at 3%. So in last 2 quarters, company has increased its market share from 3 to 3.6%. Combined ratio has also declined slightly and was at 105% versus FY24 figure of 106%. So result is positive for Go Digit. UTI AMC result is above expectation on the back of lower OPEX, although loss in market share continues. AUM was up 7% sequentially compared to industry growth of 9%, but revenue growth was also at around 6%. EBITDA increased 22% sequentially due to decline in OPEX on sequential basis. However, company continues to consistently lose market share. In last several quarters, we have seen that it has always been losing market share of around 10 basis points every quarter, and market share has now declined to 5.3%. So although because of we think one-off drop in OPEX, result seems positive in near term, but over longer term, we prefer companies like Nippon Asset and HDFC AMC compared to UTI. Venus Pipes result has improved. Revenue grew 7% sequentially, 33% year on year. EBITDA margin was stable at 20% in line with March quarter, and in last year June quarter it was 15%. Profits grew 10% sequentially and 60% year on year. Growth was driven mainly by exports, whose mix improved from 4% last year to 25% this quarter, as company got good orders from Europe and US, and also export margins are higher, so company preferred to sell to export markets compared to domestic markets. We expect strong top line and bottom line growth of 30% and 40% CAGR over next 2 years, and remain positive on Venus Pipes. Thank you.
Good morning. Nestle India posted the results, and results were below expectations. Revenue has seen the decline of 8.6% on a sequential basis, while it has seen the growth of 3.3% on a YY basis. Overall, volume growth was at 1% against the expectation of 4 to 5%. While the result was below expectations due to lower consumption, however, on a positive side, the company has delivered 30% incremental growth in the prepared dishes, that is mainly from innovation. Operating margin reported at 23.1% versus the expectation of 24%. We are structurally positive on the company on account of potential growth opportunities in the Indian packaged foods industry. However, we will suggest to hold or accumulate as the stock is trading at expensive P valuation of 67 times to FY25 EPS. Westlife Foodworld Limited posted the results. Results were below expectations. Revenue was flat at rupees 616 crore with a sequential growth of 9.6%. Triple HG stood at negative 6.7% on a YY basis versus 7.4% in the quarter 1 FY24. The management has indicated that there was a subdued demand in the in-store business. Off-premises business has seen the stable performance in terms of same-store sales growth, and the management expects the growth to improve in the second half of FY25. The operating margin stood at 12.8% versus the expectation of 14.3%. Also, the management has had a expansion. The management has an expansion plan of 45 to 50 outlets in FY25. That shows the confidence in the expected recovery. So we are near-term neutral on the stock, while long-term positive with the stock is trading at a PE of 124 times to FY25 EPS. LT Foods Limited posted the results. Results were okay. Revenue grew by 16.4% on a YY basis. This was mainly driven by their brand investments and the scaling of distribution. The gross margin has decreased by 30 basis points from 33.8% to 33.5%. This was on account of increase in the input cost. Operating margin reported at 11.6%. The stock is trading at a PE of 17 times to trailing EPS, and we have a positive outlook over the long term at this valuation. Thank you.
Good morning. Tech Mahindra reported its numbers and they were above expectations, wherein the revenue on a quarter-on-quarter basis and a constant currency basis grew 0.7%. The EBIT margins was above the street expectations. They came at 8.5 which is a growth of 110 beeps on a sequentially. Um, During the con call, the company has said that overall demand environment is better than a year ago. While the communication vertical, we see they are seeing pressure in that particular vertical, which in the current quarter also it degrew 10% Y on Y. However, in the long term, they see positive in the communication vertical. On the BFSI sector, which is relatively a small size one for the company, they are seeing improvement in that particular sector, except the investment banking and lending businesses. Company expects to see some volatility in BFSI revenues going forward. So overall demand environment is better than a year ago, and we are long-term positive about the company. Secondly, Emphasis has given out its number and they are below expectations. The dollar revenue is flat on a sequential basis at $410 million. EBITDA margins have come in at 18%, little below the street expectation. In the con call in the morning, the company has guided for above industry growth, especially on the back of better deal pipeline, and they have given a EBIT margin target of 14.6 to 16%. They are seeing early signs of recovery in particular sectors like in mortgage and all. So long term, we are positive about the stock. Thank you.
Yeah, apart from this, today morning, sorry, yesterday evening, uh, Bharat Serum Vaccines Limited, and the acquisition cost is around 13,600 crores. Uh, the acquisition is driven mainly for the women business, women-related health business, and critical care business. And the acquisition is at 22 to 23 time EV by EBITDA, whereas the currently, the company is trading at 28 times EV by EBITDA, and company has said that the business which they had acquired will be growing in high double digits. More of a in line with Mankind type of growth, and also it will be EPS accretive from the second year. Company will be funding these acquisitions through internal accrual, some equity dilution, and also from the debt. So combination of all three will be used to acquire the company. So overall seems quite positive for Mankind Pharma, as it become EPS accretive from the second year itself. Apart from that, DLF has come up with the numbers, and no doubt financially it looks a bit lower than expected from the profitability point of view. But if you see the the new booking has come very strong at 6,400 crores against last year of 2,000 crores. So that looks very strong for them, and that is the key driver for the performance of the stock. So looks positive for DLF also. So United Breweries has come up with the number, and the results were below expectations. This is generally a very strong quarter for United Breweries, that is beer segment, uh, wherein this contributes almost 40% of the total turnover of the year. Here, the performance has come a bit lower than market expectations. Market was expecting 2,600 crores of revenue, whereas it has come at 2,450 crores revenue. And also EBITDA margin has also come a bit lower than the expected 12.2%. It has come at 11.5%. So looks a bit on the negative side. So may see some corrections in coming in near term, and also from the coming quarter, the results will be more of a not so exciting. So remain near term may remain negative on the stock. So that's all from us. Now I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So, in today's session, we might see some pullback as yesterday prices recovered from the lows, and gold one can initiate buy for a pullback and buy around 67 700 with a stop loss of 67 450. On upside again 68 500 is the level where we are expecting a profit taking. So one can also initiate a sell from 68 500. And in silver, pullback till 80 to 700, 83,000 is expected, whereby one can buy with a stop loss of 80,500. From 83 500, one can also witness some selling pressure, so one can sell around 83 500 levels. In metal front, copper August contract is expected to test 808 810 levels on the upside, so buying around 795 is recommended with a stop loss of 788. And in zinc also, there could be some pullback till 254 55 levels, whereby profit taking is recommended. In crude oil, we had witnessed a recovery and prices had closed on the higher end. So we are expecting prices to test 6650, 6700 on the upside. So one can buy on dips around 6540 with a stop loss of 6450. From 6700, one can also initiate a sell for trading purpose with a stop loss of 6760. And in natural gas, prices are expected to consolidate from 165 to 185. So trading within this range is recommended. That's it from us. Thank you very much.